In the currency quadrant, taking a look at the June Japanese yen, which formed an outside range day higher today, bouncing off the 50-day moving average and finishing with the largest single percentage gain since February 20th. The high today, 67.31, was plus 0.82%, and the low today, 66.70.5, was only down 0.08%, but the high today represented a higher high versus yesterday, and the low was a lower low versus yesterday, hence the outside range day. As we come into the close, we're still up 0.78%. Now, on a weekly basis, the yen is completing its second consecutive week lower. It's only down 0.55%, and that's quite a recovery from having been down earlier this week by 1.41% versus last week. US PCE, the Fed's favorite measure of inflation, surprised the market coming out higher today, especially in the core reading. Year-over-year core PCE was up 2.8%. higher than the plus 2.7% expected, and last month's figure was also revised higher. Month over month, it came out at up 0.4%, which was higher than the plus 0.3% expected. Interestingly, personal spending was lower than expected, which suggests that inflation is coming from wages, not from goods inflation, and that wage inflation is harder to reverse. This triggered the yen's role as a safety trade as equities fell rapidly in the US. Nasdaq dropped over 2.5%, S&P dropped almost 2%. Looking back at the last time the yen had this big of a rally, which was February 20th, the S&P the next morning fell 1.75%. This shows that the current account surplus that Japan maintains is still able to allow the yen to be a flight to safety currency like today when risk assets are being sold off.